So in this video we are going to talk about my biggest trade thus far. It was a trade taken last week, a short on euro dollar. But this trade came with a lot of ups and downs and a lot of headaches. So we will have to break down and I'll explain to you the headache that I faced. As you do know that sometimes you just feel like closing the trade because it's going to pull back. But you also don't want to close the trade unless it keeps going. So that's why once you are profitable, everything is psychology. And that's what I felt in this trade. When I say that I made $10,554, it's not for you to look at the numbers. I use the number to get you to click, but all about the risk to reward. So let's jump onto the charts. I'm going to tell you the risk to reward and I'm going to break down step by step.
So these were all the trades that were taken. This was all one trade idea and trading based on direction. And it's basically as if I was constantly scaling in and taking partials on the bigger idea. So we can start off with the first trade that was a 4-hour and break it down from there. This was a trade based on manipulation of news. This was how the daily candle was looking, and I was looking for further downside because we had just reached a big fair value gap on the weekly, a big inverted fair value gap, and so I was looking for confirmation, and this was my first sign that we were going to move lower. If we go down to the 4-hour, we can see that thus far the 4-hour to me was still bullish because it was forming higher highs constantly and respecting the down close candles, right? But what happened after? So the day opened and this is the daily open, and then we have this move lower that completely broke through all of these down close candles, and to me this means order flow is now bearish. And so when I think, okay, order flow is now bearish, I ask myself, where will the market go to before it continues moving lower? Because now I'm targeting these lows and I'm targeting these lows, right? Because the order flow on the 4-hour has changed. And so when we printed this candle and New York was starting, so let's get into New York session at 12 here. So this is going to be the next candle. The next candle is New York open. So this is going to be New York open. The market pulled back too before it continues moving lower. And that's where I see this clear 1-hour order block that is in line with this 1-hour fair value gap right here. And so as soon as I see this, my thought is, okay, I want to see the market moving higher before moving lower. Right? So I went onto the 15-minute and I just waited. I started seeing what New York session was doing, and the New York session did hit the 1-hour fair value gap and the order block. So now I'm looking for further downside. But what's coming right now? What is coming right now is news. And on this day, we had core PCE and we had unemployment claims. And to me, when there's clear direction where the market is going, but the market is moving bullish, what I expect is a big move up and then a wick that is going to move lower. Why is that? Because there's a lot of people making money on these shorts, right? And so the market, what it does is that it pushes price higher to get everyone tagged out or make sure that everyone closes their trades before then moving lower. And what happened? The market spiked up, went towards the 15-minute fair value gap right here, and this is where I wanted to execute because there was a beautiful 12-hour inverted fair value gap that was being targeted first. And so I wanted to execute as soon as the market taps the fair value gap, but TradingView actually delayed the alert by 1 minute, which meant that I was trying to get the high right here with 15 lots, but I wasn't able to get it. And so I had to improvise, so to say, and I entered in a 5-lot trade. And where did I enter in the 5 lots? I entered based on the DXY. So we swept the low on the DXY and we had this big push up. Where do we retest? We retest this fair value gap. This is my first execution. So this is my first 5-lot execution, which is around this candle. And then price continues impulsing higher, moves lower towards the order block and the down close candle. And that's where I execute next. Boom, I execute right there. And then the market continues moving lower. So we start having this big push lower and we have the first sweep. So this is the first test of price of do you want to continue moving higher or lower. So once I saw this and I saw this retracing, I was like, maybe the market is going to move lower now. But my bias was so bearish towards these lows that I decided that I was going to enter in another trade with a good stop loss to target these lows today. And so as you can see, what did I have as protection? We had this fair value gap, order block, in the inverted fair value gap. So to me, seeing this playing out, I was still confident that we were going to move lower. And then after a little bit of a range, we start moving lower. We range around for a long time, and then price ends up delivering to the downside. So price delivers to the downside. I already banked 1.66R, right? In total, this was basically $1,500. And then a little bit after is where all of the headache began. Since we did not reach the bigger low on this day, I decided that I was going to hold the trade overnight. And I don't like to do this because of exactly what happened. So the trade was running 53 pips at one point, and then this happened. We start having an overnight pushback towards a bearish PD array. We range around. This pulls back basically 30 pips, and I'm thinking, I don't really want to take a break even. And that's why I personally am not a swing trader. I like to be a day trader because of exactly that. But then price ended up coming back towards the 4-hour fair value gap right here, towards the 4-hour fair value gap, and then started having this reaction. So once I started seeing that the market is still bearish and we reacted out of the 4-hour fair value gap and we have the 15-minute fair value gap being respected, I decided to set an entry on the 15-minute fair value gap, and then price kept moving lower. Price swept the low and pulled all the way back to break even. Now, if you look at this trade, you can see the target was not big. The target was a 1 to 1.6, and it was just a low because, again, these were scalps in order to take a little bit more of little movements of the market. And so this trade, I didn't want to close it after we sweep this low because to me, it was still clear that we were going to target this low. And so after I took the break even, if you go into the 5-minute, we see I took the break even and then we really impulsed lower, formed the new 5-minute fair value gap. And that's exactly where I executed. And then we had the follow through lower. So at this point, I've taken good profits from the market. I've taken 2 winners and 1 break even. And so I'm happy to just let this trade run. And as you can see, eventually, the trade continued moving lower, giving me a total of a 4R plus a 1.6R plus a 1.2R. So these were the trades that I took that netted me a total of $10,300. Again, don't look at the monetary amount. Think about the fact that here on this trade that was the biggest trade, I risked a total of $2,000 to make a total of $7,300. That's a 1 to 3.65. So think about this. If you were risking $100, you would have made $365. If you were risking $1,000, you would make $3.650,000. So that's the way you look at this. Anytime you see someone claiming that they're making money in the markets, you don't ask yourself how much money did he make. You ask yourself how much return on investment did he make? What was the risk? What was the reward? The monetary amount just gets you the click, and the risk to reward gives you the value. I hope you were able to take value from this, from the fact that not only did I trade euro dollar, but I also traded DXY. Basically, the way I look at the market in terms of squeezing a little bit more profit in, and how I made a total of 6.7R. So I hope you guys enjoyed, and I'll see you next week.